Absolutely shocking. That's the only way to describe what just happened in global trade. In a move that's shaking markets everywhere, China has suddenly canceled over $14 billion worth of U.S. soybean purchases in just 72 hours. This isn't just another back-and-forth trade issue. It's a clear and calculated hit at the core of American farming and a strong signal to Washington. China is done playing defense. The impact? Massive uncertainty in the economy, widespread panic among American farmers, and growing doubts about the U.S. dollar's strength on the global stage. For years, soybeans have been one of America's most important agricultural exports to China. They've been a lifeline for countless rural communities. In 2022 alone, China bought over 30 million metric tons of soybeans from the U.S., making up nearly 2/3 of all American soybean exports. But now, with one big decision, China has shifted its soybean buying power to Brazil and Argentina, two countries that have quickly boosted their production and are offering better prices and more flexibility. The result? American farmers are left staring at full silos with nowhere to send their crops. Prices on the futures market are falling fast. Local economies that depend on planting, processing, and shipping soybeans are suddenly falling apart. But let's be clear, this move isn't just about hurting America's farm regions. Behind the scenes, China is playing a much bigger and longer game. China is using its buying power not just to answer back to U.S. tariffs or political pressure, but to start rewriting the rules of global trade. While Washington speaks loudly with threats and sanctions, China is quietly building stronger trade ties with countries in Latin America, Southeast Asia, and Africa. It's investing in new trade routes through projects like the Belt and Road Initiative. It's buying into ports, farmland, and processing facilities across the world. All of this is about building economic independence and reducing reliance on the U.S. In the past year, China has also cut back its holdings of U.S. Treasuries to levels we haven't seen since 2010. Its increased oil trade settled in Chinese yuan with countries like Saudi Arabia. It has also signed currency swap deals with Russia and Brazil, and is now testing the use of its central bank digital currency, or CBDC, for cross-border payments. If this trend keeps going, the effects could be huge. The U.S. dollar has been the backbone of world trade for decades, but that role relies not just on America's own strength, but also on global demand. Countries around the world have needed dollars to buy key goods, pay off debts, and store reserves. But if China, the world's second-largest economy, starts doing more trade in yuan and pushes other countries to do the same, that demand for dollars could drop. And if that happens, others may follow China's lead. Only time will tell how far this shift goes. But if this move was a test for a new kind of economic system, then soybeans weren't just another crop, they were a warning shot. Make sure to like this video and subscribe to our channel. Don't forget to hit the notification bell so you never miss an update. Thanks for watching, and we'll see you in the next one.